For Max Combos, I'm LaDonna Lockard. I'm back again today with one of my most favorite guests, the incredible Jeana Lanktree. Jeana, how are you, girl?
I'm good. How are you?
I'm good. I'm good. I'm hanging in here. I am so excited that spring is around the corner. I don't know about you, but I am beyond ready for it. I know with that, with the spring, with the sunshine, that means volume usually comes up. It feels like when the sun's out, buyers are out, that loan volume should be increasing. What can people do right now to help them with that loan volume that they're going to be experiencing coming into spring? How can they kind of avoid some, I don't know, some pitfalls of the busier season?
That's a great question, LaDonna. One of the biggest pitfalls when we go into spring, like you, I have spring fever as well. I'm in Southern California, getting absorbing some early spring weather. But like you, it's going into spring. The biggest surprise that we can avoid is taxes. Every year we have tax season that comes up. And so a lot of times we know that clients like two things. They like speed and they like clarity, meaning don't ask them for something more than once. So determine the type of income you're going to use for them early on. Decide if those taxes have been filed, what documentation you need to use that income, and make sure you get ahead of requesting all that. There's nothing worse than getting to, the time where you're about to use that income, you go into underwriting, you come out and they're going, oh, well, we did our taxes, but we haven't filed them yet. And then you're scrambling to use that income. So just make sure you get ahead of any taxes that are going to be filed and getting the correct documentation. And then we'll talk about a couple other things too, which is determining if your client owes taxes versus if they're going to be getting a refund, because that's a big difference, right? You might have some money to help out with that loan, or you may have a liability that you're going to have to account for. So get ahead of that as well. That's a big one.
Let's get into that. First and foremost, how can LOs encourage maybe a hesitant borrower to get their taxes filed? I know that we're getting close. We're pushing that deadline. We're only a couple of weeks away. But for those who maybe drag their feet, or for those who have their own businesses who maybe filed an extension, they like to buy themselves a little bit more time. What would you say to them?
Clear communication. That's going to be the key. So right up front, if you know that you have a self-employed borrower that's getting an extension, you want to get a copy of that extension. You want to determine if they have any taxes owed, and then you want to make sure that they have the ability to pay those taxes, or that those taxes are accounted for in whichever loan type you're doing, because loan types have some variables, whichever loan type and what investor preference is for those. So taxes owed need to be handled differently. One of the biggest things that we've been able to capture a lot of things on, and I'm going to give you a little market insight tip here, is when people see taxes owed, they usually default to the wrong guideline. So they always go to the taxes owed delinquent guideline. However, delinquent means there's a judgment, there's a lien, there's something that is not paid. As you go into tax season, if your client owes, be sure you're using the correct guideline to determine what documentation you need, because this could potentially be new debt, not necessarily delinquent debt, and what is required for their IRS repayment agreements or anything like that is different. And you can pick up a loan by knowing the difference between those two.
Fantastic. What about for people in the lucky and fortunate category who get a refund?
If they're getting their refund, congratulations, good for them.
Right.
Yeah, no, that's a good thing for all of us. If they're getting a refund, make sure that they have the refund in hand, right? You want to make sure that they're not pending a refund, and then you get to closing, and that's what they were utilizing for their down payment. You want to make sure that that payment has, come into their account. It's likely going to come in as a large deposit, right? So make sure that you're watching those transaction histories on those bank statements and trailing that if you need to determine that those funds have been deposited, that they're able to be used, and that you don't run into any bumps when it comes to funding or getting your loan to close on time.
Oh, fabulous. Any final bits, pieces of advice when it comes to spring tax season?
Get a good accountant, have a really good accountant, and keep your documents as accessible as possible to get over to them if they have questions.
Perfect. Jeana, as always, you are a dream. Thank you so much for joining me again. I'm going to have you back because I love your tips so much. They are so relevant every single time. And I appreciate you so much. You're your own little sunbeam. So thank you for being that.
LaDonna, you are amazing. What you're doing for the industry is huge. And we're all grateful for you. I'm sure I can speak for many when I say how grateful we are that you have come into this side of the business and you're helping us all navigate it.
Well, thank you. As always, amazing to have you here. And again, for Max Combos, I'm LaDonna Lockard.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.